Gold is at very critical point. Many people are confused and uncertain about whether we are expecting a further upside or not, and what exactly is happening in the world. Today, let's talk about gold. The chart you see is the S&P 500 index divided by gold. Over the past 100 years, whenever this index has dropped below the 1.3 to 1.5 support level, we have seen a strong condition of an upward trend in gold. Conversely, when it moves above the 1.3 level, like here, it has led to growth in the S&P 500. I have marked on the chart the period when this support was broke to the downside or the upside. First, let's go to 1958. 1958, we are broke above that level. Let's see the S&P 500 first. 1958. You can see 167% upside when we are broke that level, above that level. And let's see the gold chart at we don't have history for 1958. Okay, let's go. In 1973, we are break down below that resistance. We can see the S&P 500 dropped down to 48%, and the gold at 1973 moved upward 892%. Let's go to 2007. Yeah, 2007, 2008. When we are break down below that resistance, we can see 2007. Yes, the gold continued the rally to moved upward 166%, and the S&P 500 at 2007, 2008, you can see here, dropped down 57%, and now we are once again sitting on the very key support level right here. Can it broken or not? I don't know. Let's move to the 4-hour gold chart. A clear ascending triangle pattern is visible with a target around 5800. On the other hand, let's examine the probability for the further increases in gold price. Let's check the fundamentals. The Chinese government is calling for a reduction in US Treasury holdings, another economic war with the United States, which could once again drive gold higher. Meanwhile, the margin debt has skyrocketed and now in a very dangerous zone. It's possible that the US stock market could soon experience a sharp crash due to the extremely high level of leverage trading. On the other side, this Binance article was very well done, explaining why the crypto market has experienced a downturn. It points out some very strong factors that could be significant reason for the condition of gold's bullish trend. The possibility of a war between Iran and United States could have a significant impact on oil prices, since about 20% of global oil passes through the Strait of Hormuz. Rising oil prices would push global inflation higher and preventing the Federal Reserve from cutting interest rates. Persistently high interest rates, along with the geopolitical tensions and other factors, pull capital out of the equities and crypto markets and redirected it into the gold. On the other hand, in the US, we are expected to have a new Federal Reserve chair soon, Mr. Bullish. Markets are getting the sense that he may come in with the more hawkish policies. However, if he chose to act in line with Trump's approach, he could lower interest rates, so the US can export cheaper goods, boost and keeps the production cycle running, and on the other side, service its debt with a cheaper dollar. They could pay their national debt with a cheaper dollar, and allowing the US to move through the Cold War against China with an advantage. If you look at the oil prices, it's currently around $64, and there is descending trend line pressing down on the price, and the $71, like here, the $70 to $71 level is our dynamic support. The 55 level was where the US attack on Venezuela happened, and in my view, if there were to be a war with Iran, they might wait for oil to be below $60 first. After a war, I don't think oil would move above $70. But we'll have to see how things unfold. If you enjoyed the video, make sure to subscribe to the channel and like the video. Peace out.